All right, so without further ado, my name is Kevin Hennessy. I'm the CEO here at Brabo Payroll. I'm joined by Adam Mathis, who's a tax credit expert from EF Cost Recovery. Been a fantastic partner of Brabo's. Adam, do you want to give a really quick high-level overview of what your firm does?
Yeah, sure, Kev. Thank you. Good morning, everyone. Thanks, everyone, for joining us, and thanks, Kevin and the Brabo team for putting this on. EF Cost Recovery is a niche cost consulting firm located in southeastern Massachusetts. We've been in business about 10 years now, focused mainly in research and development tax credits and the work opportunity tax credit. We do a couple other things for existing clients as they pop up and clients ask us for help. And then as things such as the employee retention credit appear on the radar and we had clients reach out to us asking for help, we'll develop other processes and services that we can offer out to people, and which is what we're going to talk about here today with the employee retention credit. Kev, you're muted.
My hope is by the end of today that you know a bit more about the employee retention credit and if it would apply to your business. If you find that this is something that you'd like to do on your own, you can work with your payroll company to give them a list of employees and the wages that you would like to claim per quarter for them to make amendments in third and fourth quarter of last year, and also take advantage of the credit for 2021. If you realize how complex this credit really is and you know that you need help, you can reply to our emails and just let us know that you would like a consultation, and we'll line you up with EF Cost Recovery. So what is the Employee Retention Credit? The Coronavirus Aid, Relief, and Economic Security Act, the CARES Act of 2020, provided $2 trillion in measures to offset the impact of COVID-19. When they announced this, it included the ERC. However, when it was initially announced, it was either the ERC or the PPP loan, and you could not commingle or use both for your business. Through the Consolidated Appropriations Act that was just passed into law, that actually allowed for you to use both of these programs in conjunction. However, you cannot double dip for the same pay periods. So that's a really key fact, and we'll take a deeper dive on that. You need to make sure that you don't have what's called a duplication of benefits. But the Employee Retention Credit is a fully refundable tax credit that incentivizes employers to retain their staff during the coronavirus pandemic by providing specific tax relief. Adam, who's eligible for the credit?
So everybody is eligible, Kevin. There's no restrictions or caps on size of organizations who can and cannot take advantage of the employee retention credit. So the answer is everyone. It's worth a look for every business owner out there should be considering taking advantage of the employee retention tax credit in conjunction with their PPP loans. And I mean, in some instances, it can be the matter of, survival for some of these business owners.
Absolutely. So we want to compare the two acts, right? So we had the CARES Act of 2020, and then we had the Consolidated Appropriations Act of 2021. And what's interesting is there are some things that the revisions allowed for in both years, and then there were some things that are year by year specific. And what we mean by that, with the CARES Act of 2020, employers are eligible if their business operations were fully or partially, I apologize, is or, typo there, fully or partially suspended as a result of government order. So a lot of you guys are in Massachusetts. If you were told that you had to have fewer people there, if you were forced to close earlier, I would say that is a partial shutdown. The key word here is or, all caps, or a 50% reduction in quarterly receipts compared to the same quarter in 2019. So I know a lot of you guys in the second quarter had a really rough go of it. So if you found that your gross receipts dove below 50% of second quarter in 2019 or third quarter in 2019 versus third quarter in 2020, you qualify under this example. But I think a lot more people are going to qualify because their operations were fully or partially suspended by a government order. The CARES Act allowed for you to take the employee retention credit starting on March 12th, okay? So, again, when we think about the combination of benefits between the PPP loan and then the employee retention credit, There was a window from March 12th until either your covered period or your alternate covered period with the PPP. So studying that and being aware of what wages would have been eligible for this credit is extremely important. The CARES Act in 2020, it allowed for you to take a 50% credit on the first $10,000 in wages per employee for a maximum annual benefit of $5,000 per person for the whole year. They did define a large employer as having less than 100 full-time employees. Adam, I know that you guys have some insight on the full-time employees. Can you kind of help us look at how they calculate a full-time employee?
Yeah, so when we mention full-time employees, it is true full-time employees. It's not a full-time equivalent calculation, which is what most people had to do when they were applying for PPP loans and for forgiveness. To determine how many full-time employees an organization had, we need to look back into 2019, actually, Kevin, and look at a month-by-month basis, how many employees in each month worked in excess of 130 hours, and then we have to average out those 12 months to determine whether they are above or below that 100 full-time employee threshold.
So keep in mind, guys, this is not the same as the Affordable Care Act. The ACA, you're adding all your pool of hours, including part-time hours, and then dividing it by a number. This one, you're only looking at employees that have crossed over that threshold. So if you don't have any full-time employees, everybody works 20 hours a week. You don't have a single full-time employee, right? Until you have it so that people are working about 30 hours a week, you don't have any full-time bodies. But you have to look at a month-by-month calculation for 2019 to figure that out. And just because you have over 100 full-time employees does not mean that you cannot get the credit. It just changes the criteria a bit. And then on the Consolidated Appropriations Act, this is where they announced, hey, you know what? You can now do this in conjunction with your PPP loan. So it's no longer an either or. So before it's like, do you want fully forgiven free money to cover payroll for 8 to 24 weeks, or do you want to do $5,000 per person? And most people found that the PPP was more lucrative. The Consolidated Appropriations Act now allows for you to use both programs simultaneously as long as you're not duplicating benefits. So that covers both the CARES Act and 2021 CA Act, right? But the Consolidated Appropriations Act for 2021 allows for you to have operations are fully or partially suspended as a result of government order. And again, but a much lower threshold at 20% reduction in quarterly receipts compared to the same quarter in 2019. So if you're going to look at first quarter of 2021 and compare it to first quarter of 2019, if you're 20% lower, that would be a gross receipts reduction, which is great news. Adam, isn't there a safe harbor that you know of?
There is. So to qualify in the first quarter of 2021, you have, it's the same criteria as Kevin's been mentioning here. You either had to have operations that were fully or partially suspended due to government order, or a reduction of 20% in gross receipts quarter over quarter, 21 versus 2019. However, they did put in a safe harbor rule where you can go to the immediately preceding quarter, and if you were greater than 20% down in the immediately preceding quarter, you will automatically qualify for 2021's first quarter. Kev, I think it's important to mention that for those businesses that are qualifying for the employee retention credit under the significant decline in receipts, once you meet that eligibility in 2020, if you say your second quarter of 2020 was greater than 50% down compared to second quarter 2019, you will remain eligible for the ERC until your receipts climb above 80% in a subsequent quarter.
Right.
So
right.
You're guaranteed the quarter which you qualify in and the following quarter, and maybe even the quarter after that, as long as your third quarter didn't climb above that 80% threshold.
And I think for like a lot of our bars and restaurants here in Massachusetts, I think that when you're looking at the partial or suspended government orders, having a 9:30 curfew if your restaurant was opening until 10 p.m. on a normal night, that's a partial shutdown. Wouldn't you agree?
Yes.
So there's a lot to look at and consider when you're doing this. What I like about EF cost recovery is they help you kind of strategically look at your PPP lending, your forgiveness. Then they take into account when you have ERC wages available, and they'll also help you to think about what a full or partial suspension is of government of your business operation. One big thing is they partner with CPA firms, so they're not a competitor of your accounting firm. Most CPAs are grateful to get the assistance, especially right now where they're doing their best to answer everybody's PPP questions, everybody's ERC questions. They're dealing with year end. They're getting ready to just get crushed by tax season. They don't have the true bandwidth to really help navigate this. So EF Cost Recovery is a partnership with a CPA firm. They're not a replacement for your firm. So I just think that that's really good to know. And they also provide audit support in the event you get audited down the road. So how do you calculate your employee count? Well, Adam touched on this, right? So you have to determine the number of employees by month that work at least 30 hours a week. You have to take an average of all 12 months in 2019. If the average number of employees is greater than 100 for the 2020 Act or 500 in the Consolidated Appropriations Act of 2021, then qualified wages include only those employees not providing service. So meaning you actually paid people to sit at home, right? If the average number is less than 100 or 500, then the qualified wages include employees not providing service and those that are working. So if you have fewer than 100 full-time employees in 2020, or you fall into the 500 in 2021, even for people that showed up to work, you will be able to claim a tax credit. One big change that I actually failed to mention that's enormous, in the Consolidated Appropriations match, so this is it, CARES Act of 2020. This is from March 12th to January 1st, 2021. And then it goes into the Consolidated Appropriations Act. For all 2020 wages, it's 50% of qualified wages paid to an employee outside of the PPP. And you can also include the cost to continue health benefits. The annual maximum per person is $5,000 per employee. So you could get there by doing 50% of 10,000, or you could do 50% of a lower number plus health insurance, as an example, to max out that $5,000 per employee. 2021 is when it gets really exciting, because now it's a quarter by quarter maximum, and the maximum for a single quarter is $7,000. That's right, $7,000. So if you have a 10 employee company where 10 people make 40 grand a year, they made 10 grand in the first quarter, right? You're going to get a credit for 7,000 of the 10,000 that you paid, also known as $70,000 for your small business. So this is phenomenal. And this also does include health benefits, but this expires at the end of second quarter as it stands today. So a big consideration is, as you're getting PPP round 2, the sooner that you get that money, the less wages that you're going to have eligible for the employee retention credit. So it's crucial to time your PPP application and receiving funds in a way that might help you maximize this. So considering things like your covered period or using the alternate covered period, it can help you to get a couple more weeks potentially in on the ERC. And for many people, each of those weeks will be credited at 70%, which is just tremendous. This is the program that I think too many people are sleeping on. Adam, can you take us through some of the limitations of the ERC?
Yeah, so it's important to note that when we're calculating employee retention credits, there's a number of moving parts and other wages that have to be backed out of the calculation and accounted for. As you've touched on previously, Kevin, any wages that are being paid for with PPP funds and included in forgiveness applications have to be backed out. If you participate in the Work Opportunity Tax Credit Program, those wages have to be backed out. And then in addition, as part of the CARES Act, with the EFMLA and the EPSLA payroll credits, if you've taken any of those and applied any of those, we need to back those wages out as well. So it's a juggling act. However, there's still a great opportunity on the table for a lot of business owners to save, as you've pointed out, Kevin, significant tens of thousands, in some cases hundreds of thousands of dollars. Excellent.
Excellent. So example of the ERC for a 10 location restaurant. You've been doing quite a bit of this. I know you do a lot of quick serve restaurants. Can you run us through this example?
Sure. So this is a quick serve restaurant location here in the greater Boston area. As you can see, they had 210 employees in 2019 when we went in to do their full-time employee calculation. But however, only 45 of them were considered full-time. So they were treated as a 100 employee or less organization for the ERC, which meant we could use all wages paid in the qualifying quarters of 2020. In this case, just in the second quarter alone, I believe we got them $212,000 just in the second quarter, and we're wrapping up their final calculation for the remainder of 2020 now, but it's going to be in excess of $400,000. So these guys were able to get over $600,000 for their 10-store network. And it's a case where, you know, their PPP loan forgiveness was impacted because they weren't able to get all their FTEs back once they were laid off, and everyone was getting the $600 a week bonus. As I'm sure most people listening can attest to, it wasn't easy to get their employees back. So.
Right, and I think everybody that was thinking that as an example, the PPP was the obvious choice. Even if they were to choose PPP or ERC, they really probably should have chosen the ERC to begin with, right? I mean, they're looking at $420,000 versus a forgiven loan of $280. You know, I'm no mathematician, but it looks like that's a higher number. So it's great that you can use both, but it's one of those things that I think a lot of people look at the PPP as the only way to get out of the pandemic, you know, and survive financially. But the ERC, you know, really is a big program and can help you to save your company. So benefits of working with Brabo and EF Cost Recovery. So we've worked together, I think, for 4 or 5 years now. And I would say over the last 6 months, we have gotten to know each other so much better because we have been working hand in hand to help people save their companies. We do our best here at Brabo to provide information on these programs, but we don't have the bandwidth to support each person's individual needs as it comes to applying for PPP or ERC or navigating these individual programs. And CPAs are in the same boat. So by us introducing clients to EF Cost Recovery, Adam and his team are able to help each person evaluate their individual circumstance and to coordinate benefits. They charge on a success basis, so they basically will take a percentage of whatever credits they can get, but you get a lot for that fee and a lot of support. Your CPA will be very happy to have somebody handling it for them. So they'll determine and calculate any available credits. They'll provide reporting of the tax credits, including the year, the quarter, and the calculations with supporting documentation. And then they provide no-cost audit defense in the event that any claims are identified by EF Cost Recovery are selected for examination by the IRS or any applicable state taxing authority. A couple of closing thoughts for me. When you signed up for your economic injury disaster loan, AKA the EIDL, and when many of you asked for, sorry, just somebody sent a question in, or when you got the grant through the state of Massachusetts as an example, when you signed up for those programs, you made commitments to those programs that you would not have a duplication of benefits. Although the ERC does not say that you can't use those funds for what a grant covers or what the EIDL covers, the EIDL and the grant, in my opinion, both kind of state that. So make sure that when you're choosing the credits that you're going to take, you understand where you're placing those other costs and you're maintaining accurate bookkeeping when it comes to PPP as a silo, EIDL as a silo, grant money as a silo, you know, employee retention credit. So it's really important to think about the combination of benefits. And that is the end of our webinar. Let me see. So we will hop into the Q&A. We are at 11:24. Anybody that wants to hang out, we'll answer as many questions as we can. My goal is typically to be done around 11:30.
So how are you doing?
So I need you. I'm on a webinar.
Oh.
Thanks. Does the drop to 80% of revenue only apply to the first 2 quarters of 2021, or can it be used for the 2020 credit as well instead of the 50% threshold from the CARES Act. Does the drop to 80% of revenue only apply to the first 2 quarters of 2021? Yes. So what they're asking is when you're taking the gross receipts test, showing the 20% reduction, does it only apply to 2021? Yes. If you're going to use the gross receipts example to qualify for 2020, you must have a 50% reduction. More people are going to end up using the full or partial government shutdown as a qualifier in 2020, unless they're a restaurant, retail, dance studio, event space. I mean, we know so many of these industries that were crushed. So yes, the 80% only does apply to the first 2 quarters of 2021. However, if you qualify on the 50% in 2020, it does not end until you get over 80% of your revenue. So if you qualify on the 50%, the only way it ends is if you get over that 20% reduction. Adam, did I do an okay job on that one?
Yeah, that's 100% true. Unfortunately, they expanded the program as part of the CAA in December. However, the only thing they made retroactive, Kevin, was that you could use the ERC in conjunction with PPP.
Okay, I just want to remind everybody, any questions that you have are going to need to be going in the Q&A section. Please don't put them in the chat. I'm going to answer just one question that's in the chat. Can you amend 2020 payroll reporting? Absolutely. Yes, you can. Next question. What documents should I submit for regular 941 for 2021, first quarter 2021? So 941, you would just let your payroll service know that you're going to be collecting the ERC until which date, because you want to stop claiming the ERC once you get your PPP funds. Your payroll company will not be aware that you're in PPP forgiveness, so you just have to be careful on that. All of these credits are claimed on the 941 form, whether it's an amendment or in real time. Will there be a playback of this webinar, and are we able to get copies of the slides? There'll be a playback. I'm not sending out the slides, but on our YouTube channel, if you go to YouTube and search for Brabo Payroll, we actually put all of our webinars up there. We've done several on the PPP with Dr. Bob Minetti. We've done another one of these with Adam last week. But yes, the replay will be available on our YouTube channel. So Consolidated Appropriations Act combines both the PPP and employee retention credit. It doesn't combine them, it just allows for you to use both. So you were not able to in the past. Can I have a copy of the slides? No, I'm not sending out my slides, I'm sorry. But you can watch it on YouTube. I have a client who has a bar and a convenience store. They are claimed on the same Schedule C of his income tax return. The bar was closed due to the pandemic. Is he able to separate the bar from the convenience store for this credit?
I'll step in there, Kevin. The answer is no there, Evelyn. They're going to be treated as a control group and need to be aggregated. However, I will tell you that if the bar is subjected to a full or partial shutdown, that qualifies the entire control group as being eligible for the employee retention credit. So we'll be able to grab wages paid at both businesses, both the bar and the convenience store.
Perfect. All right. Gary, can PPP loans that have been forgiven or in the process of being forgiven be unforgiven if the credit is more lucrative? No. I tried to do this for a couple people, and the answer was no. I'm curious to see whether in the future that will be changed, like you can reapply for your forgiveness, but unfortunately, if you've already done it, you just want to navigate around it.
Yeah, Kevin, we are waiting on the IRS to actually issue a ruling on that particular matter, whether or not a forgiveness application can be resubmitted, because I think it's important to just point out real quick that, you have a 24-week covered period. However, if you only needed your wages that you paid in 14 or 16 weeks, that's all we should be including in those forgiveness applications so that you have additional wages for the ERC. But nobody was taking that into account if you filed for forgiveness prior to the change of the law. So we're expecting a ruling on that from the IRS.
exciting stuff. It's definitely great when they make changes, but it's better to know, like, when you're making your decisions the first time, you know, that you're putting yourself in the best possible position, because, like, you don't want to have to be, you know, waiting for them to make a big decision that's going to really swing things. But it is nice when it works out. Like, for example, the 8 weeks when it converted over to 24 weeks, that was awesome when it happened, but there were a lot of people doing kind of that Medal of Honor run, trying to get through their stuff in 8 weeks, and it's just tough kind of navigating all these programs when they're changing on the fly so much. So, Carla, this is a credit, not a refundable credit. Does it reduce your tax liability? It is a fully refundable tax credit. In fact, you can actually even seek an advance of the credit depending on how you're going to be using it. But I wouldn't recommend seeking an advance if you're going to be using the PPP. Adam, do you have anything you want to add to that?
No, I mean, you hit the nail on the head. It's a refundable payroll tax credit, Carla. So it's claimed obviously on your quarterly payroll tax filings or through an amended quarterly payroll tax filing. So it doesn't have any impact on your income tax. So if your payroll tax liability was $20,000 and your ERC is calculated out at $35,000, you're going to get, you know, a refund check above and beyond that liability. And it, like Kevin said, it is fully refundable.
Right. All right. Can I take the ERC if I open a company on September 2020? No. Am I wrong, Adam? I say no.
I believe
September 2020.
I'll have to dig into it, Kev, but I do believe they changed the rules and made it so that new businesses could take advantage of it. I know that if you start a business, yeah. So we can get her the answer on that, okay?
Robert Lean, what is your fee percentage? I'll answer that. It depends on how much your credit is, right? So if we have a $1,500 minimum at EF cost recovery, so they're not going to do any work unless it's a bare minimum of $1,500. And, you know, if it's a really large credit, they may change the percentage. It's a lot of initial work that doesn't necessarily scale. Some of it does. There's a lot of complexities. So each situation is different. So if you expected me to be elusive on what our fee percentage is, I am. So I have 2 full-time employees since November, and I added 1 on February this year. Again, I recommend that you reach out to Adam and his team to do a consultation and see if that makes sense. Are you saying that you could do both the PPP and the employee retention credit? Also, that you should apply for the ERC first because it provides more funding? I'm a bit confused. Carla, if you're a bit confused, it sounds like you need to hire some people to get some help. So, you know, if you're trying to use this webinar to, like, understand every single component of the PPP and ERC, it's probably going to come up short. You're going to have to do some independent research to try to figure it out. Yes, you can do both. You don't have to choose either or, but it is crucial that you look at certain windows and isolate them. So as an example, when we go to a prior slide, I'm just going to take us back a couple slides real quick. You know, when we're looking at the CARES Act of 2020, March 12th is when it begins. You most likely got your PPP funds somewhere at the beginning, middle, or end of April, maybe even May, right? So from March 12th until when you got the PPP is one window. Even if you were to use a 24-week window, we know that that would have ended sometime in the area of October. However, if you were able to use your PPP funds in 8 weeks, then maybe you didn't want that full window to be used for forgiveness. So if you already did your forgiveness, it's a lot more cut and dry. If you haven't yet, there's a lot to consider before seeking your forgiveness. And EF cost recovery can really help you to strategize around that to maximize the credit. Dave, can you use PPP and ERC during the same period for different employees, i.e. part of payroll used for PPP and the rest used for ERC? Like just as an example, Adam, I'm wondering if you talked about wages in excess of $100,000. Let's say that there were wages over $100K that were not used for PPP forgiveness because they were ineligible. Could they be claiming those wages for ERC?
Yes.
Even if they fell? Oh, that's interesting. Big part of the strategy. So again, it sounds like you can. However, check with your tax professional or work with an expert tax team to really qualify that. What about disaster, ERC? I don't know what that means. Got to do a better job of phrasing that. That's
There
really not even a thought.
there are credits available, Kevin, to businesses that were impacted by disasters such as, the California wildfires, hurricanes, stuff like that.
So are you also talking about some of the riots and stuff as well? Wasn't that part of it?
It may be.
Or no?
Frankly, it's not something that we've done a deep dive on at this point because we haven't had the need for it. We haven't had any clients approach us about it, but it is something that we can look into.
Okay. So, Carrie, how do you combine the PPP and ERC when the PPP loan is already forgiven? You're just seeking the wages in that year outside of forgiveness or wages that were not eligible for forgiveness. So you cannot say, like, let's say that you got it on April 9th and the following week is when PPP forgiveness started. You're not using that payroll to claim the ERC. You also want to make sure that for the Families First Coronavirus Response Act, anybody that you had for COVID pay, those wages are also ineligible. You really want to be careful of duplication of benefits. So you're looking at payrolls that were used for forgiveness not being used for the ERC. So we only qualify for the ERC in second and third quarter 2020. Can the ERC be used for payroll costs incurred within the appropriate quarters or only when the payroll is paid? It's for when the payroll is paid. And if you qualify for second and third quarter in 2020, once you get to fourth quarter, like you had to qualify based on gross receipts, right? Or the full or partial shutdown. So it just depends on how you qualified. But I believe, Adam, can you answer this? So, like, for example, if they were in PPP forgiveness, let's say, they can't have gotten credits earned during that forgiveness, right?
No, not while they were using the PPP money to pay those wages, no.
Right. So, Jay, you need somebody to take a closer look at your specific situation. Can you talk about the safe harbor rule again, please, for qualifying for 2021 Q1? We're a seasonal business and have no receipts in Q1 of any year except for some small merch sales less than $500. Adam, any thoughts on that?
What we need to look at is your Q4 2020 versus Q4 19. If you meet that 20% drop in receipts, you qualify.
Lynn, unfortunately, we didn't do the due diligence to get CPE credits done for this. There are not handouts, however. We will be posting the recording on our YouTube channel. Look up Brabo Payroll on YouTube. You'll see last week's as well as this week's. This week should be done by the end of today. Is 2020 credit only available for the wages paid during the period the business is partially suspended, or can we count all wages paid during the year? It's only for wages that are paid during a qualified quarter. So it's either partially or fully shut down / qualifying on gross receipts. It is not for the whole year if you didn't qualify for the whole year. And keep in mind the period started on March 12th. Did you say we should apply for ERC after we go for forgiveness? I really recommend that you try to do those two hand in hand. If you haven't gone for your forgiveness yet, it would be very smart to coordinate your PPP forgiveness efforts with the ERC in mind to make sure that you're maximizing both programs. Can you send me contact for submitting to evaluate the ERC? Yes. Anybody on here, we will be sending out an email at the end of this. If you're interested in talking to Adam and his team, we'll get you guys lined up with an appointment. And agreeing to meet does not mean you're agreeing to sign up. It just means that you want to take a look at what they can do for you. So can you claim the 2020 ERC in 2021, or do you have to amend the 2020 941s? Adam?
You're required to amend. Unfortunately, the IRS didn't come out with their guidance on this issue until I believe it was January 23rd or 24th when they came out and said, oh, hey, yes, you can do a catch up on the fourth quarter 941 if you're filing timely, but I know it's only 6 or 7 days away from being due. Joke's on you essentially. And the other way to claim it is by amending the applicable quarters 941s.
Yeah. Can you use the ERC and PPP for 2020 period? Yes, you can use both. You just have to time it appropriately. One employee is working 30 plus hours. Only employees working 30 plus hours are eligible for the ERC. No, that's not true. All wages can be eligible. It just depends on whether you're over that 100 employee threshold for 2020 and 500 for 2021. Then the people that would be eligible for the credits, if you're a larger employer, are people that you paid to not work. So if that's you, I really recommend you have a consultation with EF Cost Recovery. ERC only works with employees, not for self-employed individuals with no W-2. That's correct. It has to be on W-2 wages. There certainly is some stipulation relating to family members. That's definitely something that you're going to want to talk to a tax professional on. The business owner themselves that receives the W-2, those wages would definitely be eligible. There's speculation on two different points relating to family members of the owners, whether it's a child, et cetera. But if you do have family members, I recommend that you take a real deep dive before claiming credits on them, and I would not do so without working with the tax team. What documents should we submit for the ERC calculation? It depends. If you're doing your own payroll, you would amend your 941. You would have to look for instructions for that online. Should I amend 941 for second, third, and fourth quarter 2020 separately, or amend fourth quarter? So Adam's point was that in the past, you were able to, you had like a 7-day window to put all of the wages for 2020 on the fourth quarter 2021. Since we've missed that window, now you must separately amend each quarter. Must you include all covered period wages for PPP forgiveness, or only what's needed to get full forgiveness, leaving the rest to use for ERC? Yes, that's the point. If you're strategic in what you're using for PPP forgiveness and you don't have redundancy between the PPP and the ERC, that's a great strategy. So if you only used 8 weeks of wages for PPP forgiveness, that means that all wages outside of that period could be eligible. Again, I really recommend that you work with a strategist. All right, so I'm not in Massachusetts. My industry was never ordered to shut down. We did a partial shutdown because schools and other businesses were ordered and they did not need our services. We're a cleaning company. We were only down 20% in 2020 over 2019. Brian, you really need to look at the quarters. So during that time that you were down, if your second quarter is only down 9%, then you would not qualify. In 2020, you had to be down 50% for any quarter in 2020 versus the same quarter in 2019. In 2021, you have to do the same thing, but it's only a 20% reduction. I hope that helps. My small business was a side hustle in 2019, and I went full-time in January 2020. What timing? If I wasn't paying myself as an employee in 2019, but started to before March 2020, do I have a chance of qualifying for this? Adam is saying that he believes the guidance has changed. It's worth taking a look at. I don't have a perfect answer for that right now. Sorry. Our PPP ran out in the middle of third quarter. Well, that's exciting. That means anything after that qualifies. If you qualify, you still have to look at gross receipts and partial shutdown. Full-time employee count. If you have 3 separate entities with common ownership, is full-time count added together? So that's a control group. Adam, can you answer?
Yes, so that we'd have to look at the entities. I'm assuming that what you're saying, Laura, is that you own 3 different entities and it's common ownership. So yes, those 3 entities would have to be aggregated for the purpose of determining full or partial shutdown, as well as determining a significant reduction in gross receipts. And in this case, for the full-time employee count.
If a company doesn't qualify for PPP second round due to receivable condition, can they apply for the ERC, and how many employees?
Yes,
I do not understand.
Yeah, I understand that one, Kev. I think what he's saying is he didn't qualify for the second round of PPP because he didn't have a quarter that was greater than 25% down.
Yeah.
Just because you don't qualify for the second round of the PPP does not mean that you don't qualify for the ERC. It's worth a look. You may have had a 20% reduction, but not a 25% reduction, or you may be partially or fully suspended. So it is worth looking, and you are eligible if you meet the criteria.
Great point. What if you didn't pay your third or fourth quarter 941? I don't know. Do that. Do your payroll. Can a payroll period be split between PPP and ERC? Any wages that you're using for payroll forgiveness cannot be used for ERC as far as like a payroll period. Let's say bi-weekly, and only half the week would have gotten them to the maximum amount. Can they? Yeah, I think you've already answered that, Adam, because we've already talked about wages that are outside of 100,000. As long as the wages that you're claiming are not being specifically used for the PPP, and that's where documentation is going to be king. That's where audit support is really going to matter, because like it doesn't matter unless somebody's asking, right? Anybody on this call can claim the ERC. Whether you're right or wrong, you won't know until you go through an audit. So at the end of the day, you're able to just put in and say that you qualify, but you're going to have to substantiate for what reason. So I would recommend, Dave, that you work with a tax professional. Can you file now? I assume that I need to speak with Adam. Yes, you can definitely file now. You'd be filing late. There's going to be some penalties, but it needs to happen because the penalties will only get bigger. Could we use 24-week covered period, but ignore the early weeks to use the ERC for what that time period is if we qualify for the ERC? Yeah, I mean, whatever wages you're submitting for forgiveness cannot be used. So think strategically, yes. Do we have to include the PPP wages in the $10,000 per employee eligible wages limit, or can you exclude PPP wages and still get $10,000 in eligible wages per employee? You can only get the $5,000 in credit for 2020 for wages that were not forgiven on the PPP. So that might be wages in excess of $100,000. That might be for pay periods that you did not include in your forgiveness. But you cannot get forgiveness on wages and then go for the ERC at the same time. That is a duplication of benefits and a problem. We have 4 questions left. I'm going to answer these 4, and then we will call it a day. So in 2020, if you only had $10,000 in wages, your credit would be $5,000, correct? Is the credit based on employer portion of 941 taxes only? Yes. So you would have a credit that could carry over to 2021. It is a refundable credit. If you had only $10,000 in wages, your credit would be $5,000. Yes, assuming that they qualify and assuming that you weren't covered by PPP already.
Yeah, on those 2020 amended returns, Kevin, there's no option. There's no option to apply it to a future quarter. So it's going to be requesting a refund for the full $5,000 on a timely filed 941. You can make the election whether you want to apply it to a future period or if you want to request a refund.
Got it. So Carla was laughing at me because it's for a client. I'm assuming Carla is a tax professional or a CPA. Yeah. Well, let's get that client in order. We have the same types of people over here that need our help, and thank goodness we're here to support them and get those things filed and get them out of trouble. Can a sole proprietor apply? Yes. Not for yourself, but for anybody that you pay as a W-2 employee. Yes. Right?
Yes, correct.
If you're doing a 941, you can apply. Last question, can the ERC be used for payroll incurred in a qualifying quarter, but not paid until the next quarter where they did not apply, where they didn't qualify for the ERTC? So the employee retention are wages paid within that quarter, not the time period work, right, Adam? So let's say they qualified in Q1 of.
Yeah, it is.
Go ahead.
He or she is correct here, and it's for the pay period, Kev, not the pay date.
Wonderful.
So,
great. Interesting stuff. I mean, almost everything else in payroll is based on the check date. So I definitely learned something new today with that last closing thought. Again, my name is Kevin Hennessy. I'm the CEO here at Brabo Payroll. We support roughly 400 clients throughout the country. We do specialize in helping people to navigate the pandemic, providing really great information. If you want a consultation with Adam, please just reply to the email that you originally got. Shoot us a message on Facebook to our Brabo Payroll Facebook page, or you can shoot an email to service@brabopayroll.com, and we'll get you set up with a meeting to take a look at your specific situation. I hope this is helpful. I hope you learned something new, and I hope you guys do your best to save your companies. Thanks so much for coming.
Thank you, Kevin.